Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, November the 28th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, take a look at the market macro to micro, look at our trade levels, our targets, and then we create our hypotheses. Our hypotheses are our trade plans. We do create multiple trade plans. We do not know what the market's going to do. Therefore, we create multiple scenarios and then wait to see who takes control and then execute the plan that best suits the market. And as the context changes, shift went from one plan to the next. Now, a very good example of this was yesterday. So I don't know if you guys have watched the video, but I did an impromptu. It's a short impromptu video. I think it's like 18 minutes that I did yesterday afternoon, talking about how we shift from one plan to the other. So we took yesterday's pre-market hypotheses and then gauged them against the market. And showed where we are shifting from one plan to the next. So go watch that video. It's on my YouTube channel, Quantum Leap Futures, and it gives you a really good idea of why we have multiples and then how we shift from one to the other. Anyway, this is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. I do not do this for commercial gain. I do this live in the go-to in this pre-market, and then we do live trading analysis during the course of the regular trading hours. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. Past performance is not indicative of future results, and the trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So let's take a look at yesterday. Yesterday, our Hypo 1 was an open auction in range just outside of value. We were looking for a move down into the 49 to 42 area. We were looking for the break of that week low at the 52.50 double bottom from the prior session. And then we were looking for buyers to rotate us back up through value, okay, break above the prior day range and come up and target this 82 to 84. And we are looking for a bullish engulfing. Hypo 2 was an open auction, a move up into the 69 to 73 area, and then find sellers and rotate us down and come down into that 49 to 42 area base, and then come back up inside of the prior day. Hypo 3 was an open test drive, failure to take out the prior range low, find buyers early, and rotate us up into the range high by the initial balance being set, and then a continuation up into the 94 area. So when we opened up, it looked like we were actually going to be in Hypo 2, and so we were in Hypo 2 until we got this move right here. That shifted us back into Hypo 1, and then we had the FUBAR Mr. Sneaky, and then we were looking for a rotation back in. This was probably the best trade of the day, and I missed it. And we basically just chopped sideways and then finally made the move late in the afternoon and closed on the high. And I noted that we had auction interrupt us. We interrupted the auction, closed at the high tick of the day, and we're looking for continuation. We were looking for that 95 area. I said in the pre-market yesterday, I didn't think we'd get there yesterday, but here we are. We've done it in the Globex. So let's take a look at the Globex. We opened auction just out of range. We came back down, tested inside of the prior day range, popped back up, went sideways during Asia, and then finally, once we got into the European session, they started grinding it up. And where did they go? They brought it right up into the 95 area, which was our next destination up. So we've got inventory is about 90% net positive in time and value. We've got good kurtosis around this 86 area, so we are accepting value higher. The VPOC was higher from the prior session, so we are accepting prices, and we're going to open with another gap up today. So we'll get into that in just a few minutes. Let's take a look at the news. We do have some more news today. We did have GDP. GDP came out slightly less than expected, 3.5, same as before. Corporate profits were up. Core PCE prices was better than I said worse than expected, and then trade goods was a miss, and PCE prices was a miss. So it was kind of a mixed bag. It really didn't do much to the market. We've got new home sales at 10 o'clock. That's going to be the big one with Richmond Manufacturing and its associates. 10:30, we've got crude oil imports and all of its associates. And then we've got Bank of England financial stability report. You know, why would this be important? Well, because of the fact that we've got this whole Brexit deal coming to a climax in December, with them having to sign the deal. And then we've got Powell speaking at 12 o'clock. Remember that tomorrow is the Fed minutes. So Powell's going to be speaking. We've had Fed speakers pretty much all week so far. And then that's about it. Now, remember that they've got the G20 coming up, and we've got a lot of headline news, a lot of stuff coming out with China and tariffs, and Trump making statements about the Fed and about China. So just headline news seems to be moving this market. Now, each day I start my morning with a simple candlestick chart. This is a routine that I do every day. It's very basic, but it's very important to keep my mind grounded to where we are in context in terms of the different time frames. And what I do is I use a 9 EMA, a 20 SMA, simple candlestick chart. What I'm looking at is how strong is the trend. Do we have good slope and separation? Is price paralleling the 9 nicely? Or are we challenging the trend by testing the 9 or breaking the 9? Or are we violating and possibly getting a new trend with a move below the 9 and the 20? 1 second, please. Sorry about that. So in terms of the monthly, we had beautiful 14 months of one-time framing up. February, we violated that one-time framing and challenged the 9. For the next 2 months, we fought the 9, and then the buyers won, and we got the continuation, and the trend continue. And then October, we broke below the 9, challenged below the 20, but couldn't close below the 20. And so far in November, we've tested below and we've tested above, and here we are, basically, sitting right near the open of the month. The open of the month is 2706. That's the Globex open, and we have a possible trend change, but we are seeing some weakness on the monthly. On the weekly, we have broken below the 9 and the 20, and we're getting slope and separation. And for the last 3 weeks, we've failed to get back above the 9. The 9 right now is up in the 27.43 and a quarter. That's above the yearly VPOC, which is up at the 27.28 area. So still have a possibility of getting back into the 2700s. Remember, we've got 3 sessions left, or 3 days left in the RTH until the end of the month. And the open of the month is 2706. So there's a battle going on right here, okay, to get us back above and close November on a positive note rather than as a bearish month. Going to the daily, we are getting back. We're back above the 9 and the 20. We talked about this naked cross the other day up here in the 27.20 area. Remember that the most traded price, the most accepted value, is still above there. So if we can hold above this 9 EMA, the current target right now is going to be the open of the month, of course, at 2706. But if we go above the key line in the sand above at 2707. I'm looking for a move up into this 2720 to the naked close, and then the naked cross, and then a move up into the microcomposite VPOC. Going to the 4-hour. You can see that we are starting, we got good slope and separation, so we're starting a trend up, and we're starting to one time frame up on the daily. And then, of course, going to the 30-minute, you can see again that we're showing that we're getting a decent trend and just stair-stepping our way up. So let's take a look at that structurally. So just to give this context, we started this trend back at the election, just before the election, and we get this really powerful move up. Then we put new all-time highs in. They fail. They rotated all the way back down again to the beginning where we accepted price that started the trend up. And then basically we've just been chopping in this very, very wide value area. 1 second. Palmer, your mic is on. And we tried to hold. We put in a new all-time high, which is unequalized. The all-time high is actually 2947. Put in the Globex. This is an RTH chart. The all-time high in the RTH is 2946.50. This is what we call an unequalized high. Generally, those will get broken, and we'll see that 2947 get equalized. But we're nowhere near that, so it's not pertinent to our trading today. We came back down, and we are just chopping around this distribution around the yearly VPOC at the 2750 area. This is a slush area between the 31 and the 27, and we fell out of balance. We came down 2 days. We tried to hold value here at the 2663, and they couldn't, so they gapped down again. Chopped around for the 2 holiday sessions, accepted value at the 2642.75, and then we gapped up. And then we've had 2 days of balance. And if we look at this 2 days of balance, the VPOC is here at 73.75. The accepted value higher than the microcomposite VPOC. And what do we get? We get a gap up day. And now we're chopping around where they tried to hold value before the gap down. And we've got this CLVN at the 2693.25, the VPOC from the area that we tried to hold value at the 95 area, and then we've got the key line in the sand above at 2707, and above that we'd be looking for a move back up into the overall yearly balance and come up here and try to hold up here into the end of the month to see if we can continue for a Santa Claus rally in December and move up. But there's a lot of headline news, a lot of turmoil going on in the market, and a lot of turmoil in the world. So who knows? But right now we've got to take in context to where we are. So we accepted value for the last 2 days at the 74.50. And we've gapped up, and we're trying to hold this value that we tried to hold before and get back into the 2700 and above the year open at 2706 and above the CLVN at 2707. Key areas to watch here, obviously the 95 to 93 area, the 2700 centennial number, the 2707 is our key line in the sand above. Our key line in the sand below is going to be our 83.50 to 84, which is our range high from yesterday, and then below that 74 and 64. So taking a look at the and starting to move our Globex numbers over, we have a weak high up here. VPOC is not shifted up. I don't know if we'll get enough volume to get the VPOC shift, but right now, as it stands, the VPOC is down here at the 86.50. We've got a key LVN right here at 89.50. This is going to be our over-under line. What do I mean by that? I mean, above it, I'm basically still looking for longs. Below it, I'm looking for a bigger move back down to test what is going to be the key line in the sand and the range high from yesterday. All right, and then we got the year open below us, and the overnight low is down here at 81. Our 20-period daily ATR, our average true range for the full session, is running at 49. We're back below 50. I mean, it's still huge, but we're back below 50. And based off the overnight low, our daily ATR target, believe it or not, is all the way up at 27.30. What does that mean? It means that without expanding our average range right now, we have the capabilities of getting back up into this balance that we're talking about for the year and back up into this 27.50 area to 27.31. Off of the overnight high, our current overnight high, which could shift, we're still closing, trading close to it. Our overnight high is the 97.25. And off of that, 26.97.25, less the average true range. Our daily downside ATR target is 26.48.25. And that's just below another key level, which is at that 49 area. Overnight inventory is basically net long on fairly decent value volume. We got 172K. Normal is about 100K. So we've got some activity in the Globex and really good kurtosis around this 86.50. So those are our key levels that we're looking at. Now let's talk about our hypotheses. And again, I hate saying this because it sounds just very sketchy, but Hypo 1 and Hypo 2 are going to be equally weighted just because of the context and the volatility in the market. But we're opening up with a gap rule. So if we opened up right here at 94.25, our close was 84. So it's about a 10-point gap, and our half gap fill is our over underline at 89. So just keep that in mind. So I'm looking for an open auction out of range. I'm looking for responsive selling back towards the 89, somewhere between 89 and 84. I'm looking for buyers to step in, rotate us up through the 95 and 96, close this gap at the 96. We did not close it in the Globex. It has to be closed in the RTH, and I'm looking for a run up into the 2700s and a target of this 2706 area, and basically fighting the month open going into the close. That is Hypo 1. Hypo 2 is basically the opposite of that, a open auction out of range, a push up into the overnight high, and a test into the 2700, and somewhere between 2700 and 2707. I'm looking for responsive sellers to step in, rotate us back down through, come down and test the range high, push through into the value area, and take a trip through value down into the 66 to 64 area, and basically go sideways and close near the year open at the 75 to 76 area. That is Hypo 2. Hypo 3 is a gap and go day, a trend day up, continuation of this one time framing up. Open test drive, move down to the overnight VPOC, somewhere between 89 and 86.50. Buyers step in, leave the gap open, rotate us up through the month open and push up into this 22 to 27 area as a trend day up. That is hypo 3. Hypo 4 is a take back day, and that would be an open test drive. Take out the overnight high, just tick into the 2700s, but reject the 2700s. Clearly rotate us down, take a trip through the value, chop in this area, and then fail and push through down to this 42 area to 34 area, and that is hypo 4. Hypo 5 is a balancing day after the gap. You see, we've been seeing these a lot, and that is basically a day where we go sideways above the prior day and hold value above the prior day range with a basic range of about 15 to 20 points. So between 2710 and 2780 area is where I'm basically looking to on the alternative fifth hypothesis. Okay, so that's my hypotheses on ES. Take a look at gold. And gold just continues to do what it's been doing, is just chopping, and is starting to expand the range to the low side. We talked about the 17 area, that if we didn't hold the 17 on the next test, to look for them to rotate back down into the 1207 to the 1202 area, and this area has to hold this time. If this does not hold, this fractal low is going to get taken out, in my opinion, and we'll get a bigger move down, and the likelihood is to come down into the 1150 area. If we can hold the next test on the 1200 area, this could give us a good bounce for another $30 to $40 move back up into this 1233 to 1245 area. Key levels to pay attention to is the 22 to 23 area. We want to watch this value area low at the 10s, below the 10s. Look for them to do a quick dip down into the 07 to 05 area, and then we've got to hold this 1202 and make a move back up. Otherwise, it could be bad for gold in the midterm to come back down into the mid 1100s. If we can come up into the 23 area and accept this price, again, the upper immediate target is back into this balance that we are trying to hold up at the 1233 to 1235 area. Anything above that, look for them to push through to the other side of the distribution and to that CLVN and the fractal high up there at the 46 to 45 area. So that's what I'm looking at in gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.